It is Strategy Saturday yet again, and today's strategy is going to be focused actually on Ethereum. Now, you could perhaps apply this to other cryptocurrencies, namely Bitcoin, but inputs would have to essentially change probably a little bit. So ultimately, the focus here is on Ethereum. We'll go over a little bit of Bitcoin action at the end of this video. And I should also let you know that you can get the automation tools for strategies like this or any other strategy really in the link in the description below. So without further ado, let's just jump right on over here. First things first, let's show the results over the past 4 years. So this is back tested from January 1st of the year 2020 to basically the end of January of 2024. We could actually send that out to current times, and why not? I'll calculate that soon, but it'll take some time. And in this case right here, we can see that it has been steadily up and to the right, which is generally what we like. And as you can see, there have been some dump offs here and there, but ultimately, and the most important thing that comes with any sort of strategy and strategy creation is that the equity curve continues to print higher lows the whole way through, kind of letting us know that the strategy is still viable long term. So I'm actually going to have it calculate present day in the meantime. There we go. And what we can do from there is we can go over essentially how to set it up. So okay, this one's going to be using only freely available indicators on TradingView. Can you perhaps do a similar strategy with some of our other indicators that might print a little bit better? Yeah, sure. But I think it's actually quite viable in its present form. So again, the focus is on Ethereum, and what we're going to be doing here is we're going to get rid of that strategy test for right now. Oh, by the way, here are the full results for, I guess, the last 2 extra weeks or something like that. It's a little bit better, I guess. But let's put that down and let's actually focus on the strategy itself. So this one's going to be running off of 2 indicators in particular. That's it. It's pretty simple, actually. In fact, incredibly simple. So we're going to be using the PMARP and the BBWP. Again, both of them completely free on the TradingView library. Just bring up the public library right here. Type in PMARP. There, someone by the caretaker, and BBWP. If you guess it's by the caretaker, you're also right, because he's just a fucking man. All right, so now that we've gotten that out of the way, you'll bring them down here. First, we're gonna need to format these indicators to, well, be relevant. And what we're gonna do is for the PMARP, we wanna use a 21 length EMA type and look back of 100 and a signal MA of 5 with an EMA MA type right there. So those are the big ones that you need to adjust. And then for the BBWP, what we want is, this should be default. The moving average right here might not be default, but it's just a 5 simple. Everything else pretty stock standard. All right, sweet. So now that we've gotten through that, what we can do is we can go over here to the strategy checklist, and we can go over the old rigmarole. So first things first, what time frame we're going to be focusing on? 15-minute time frame. What to be using for the main source of edge, PMARP and BBWP. Here are the settings yet again. And what's going to define a risk management parameter? Actually, in this case, in the way that this one was tested, nothing. Risk management is going to be done by the strategy itself. The exit criteria for this is what it is. And that's how we will take either gains or losses, but it'll be coming from a singular source actually. And in fact, if you wanted to maybe optimize this in a slightly better way for yourself, that would be a good area to start. But how will positions be entered? So we're looking for the PMARP, actually signal line, to be below 15 percentile. We want to see the BBWP moving average having a negative slope, and the BBWP itself, not the moving average, but just the BBWP, above 70 percentile. And how will we exit positions? When PMARP plot line gets above 75 percentile on closure. Once it does that, out, which might be a win, might be a loss. But as we can see over here, more likely to be a win. Let me actually bring this up again, so because you can't really see it too well, but 67, just around 67.25% of the time, that is going to be a win. But when it loses big. Or, well, in these instances, this is kind of where 2021 turned into 2022 for the beginning of the bear market. But after that initial drop off for the first couple of months in 2022, it actually started to continue to print gains. So interesting. Just, another reminder that real trading success is had over the course of years, not just like one fucking trade. You want that steady up and to the right. And yes, it will come down at times. You can't be perfect, of course. Fucking of course. If you're looking for perfection, or also perfect English, which is also perfection, get the fuck off the channel, because I don't think it can be done, or at least I can't do it. Anyways, also, the days traded. We're going to exclude Thursday and Sunday from the data. Why? Just because the results are worse, and that's a good enough reason for me. All right, sweet. So now that we've gotten that done, then essentially that is the setup. So I'll actually very, very quickly, I'll show you how to do it on our automation tools so that you can, populate this. I mean, should be pretty obvious, I guess, but PMARP signal line, boom, there you go. Entry below 15, PMARP plot line, boom, above 75. We could also make that equal to as well. Not gonna change the results much. BBWP, again, wait, you bastard, how dare you, should be above 70 though. Yep, above 70. And then we want to see that negative slope on the moving average for the BBWP right here. And other than that, we just want to make sure that Thursday and Sunday do not trade, which we're not, so that's good. Anyways, back onto it right here. We can run through a few examples. You can actually see, took a couple of losses right here. Even with this criteria, you can see this loss, not anything super crazy, nor is this one. This one entered you in at 23.38, exited you at 23.24. Yeah, fair enough. But the idea is that the wins outpace the losses. Yeah. Anyways, okay, so let's go through the criteria. We'll do it one by one. All right, so obviously we can see that we have one right here, but let's just mark off the critical regions. First things first, PMARP signal line. So the moving average on this indicator must be below 15. All right, we'll just mark off 15 area right there. So anything below there is where we should probably start to pay attention. Then we need to see that the BBWP is above 70 simultaneously. So we'll mark off 70 over here. Boom. All right, so when the colored line, sounds racist, but when the colored line is above 70 percentile, okay, that's the next condition. Then we need to see the moving average on it, the white part, the colored part and the white part, terrible, just absolutely terrible, having a negative slope simultaneously while all of the other conditions are present. So in this case, we reference the top left-hand corner, the white number. If it decreases from the prior closure to the current closure with all the other metrics in place, then we have an entry. And assuming it's Thursday or Friday, which in this case it is Monday actually, or sorry, Thursday or Sunday. In this case it's Monday. And again, what do we see? Okay, PMARP below this level right here. I'm gonna mark this off on the chart. Boom. Okay. We see BBWP obviously above 70 percentile right there, and the moving average prior closure, top left-hand corner, 99.68, current 99.21. That's a decrease, negative slope. Okay, great. Enter, and then we wait for PMARP to get above 75 on a closing basis, and that happens right here. And what do you know? You have a nice win on your hands. And so wherever, when the PMARP gets to 75, it's just whatever price it is, that's either going to be a win or loss, but that's how we exit on this one. You could lower those numbers again. You could kind of play around with that way. That would be maybe one way to find some optimizations for this one, especially if you want to cross-pollinate this strategy with perhaps other strategies as well. Definitely possible, but let's go through maybe one more example. Again, okay, 15 right there. All right, then we want 70 over here. Just kind of erased everything. So there we go. Okay, beautiful. Let's scroll back, get some fresh price action. Let's see what this one looks like on a loss. Again, we can see that this one actually does dump off like pretty hard, but it says, hey, you're probably going to get out at a better price. So just hold your fucking horses. But a good example here, as we do see, let me just mark this off. Boom. PMARP below 15 percentile right there. Beautiful. We see BBWP above 70 right there. And this is the first tick down on that moving average. So this would be the entry right here. Okay. And then the next part you already know. Just wait for PMARP to close above 75, which happens right there. And 75, by the way, is right here. And in this case, it's a little bit of a loss. So, this would have been, or it's pretty nasty drawdown to be fair. It's like almost 5%. But at the end of the day, get out with about 1.25% loss in terms of entry to exit. This one over here, small win, of course. Maybe a bigger one right there, actually. And right there, and right there. And, well, this one actually had a nice nice little streak right there. In fact, that's what you'll typically notice. But if we go back into the strategy tester, the cool thing about this is that it'll tell you kind of, what to expect. And what we can do is we can go through this. I'll remove my face for the moment, and we can see that wow. when you don't have max take profit by percentage or max loss by percentage as well, you can get some pretty fucking crazy numbers on something like this. That does happen. And again, if you're looking for an obvious way to optimize this, it would be with the risk management, because if you did have a maximum stop loss in place, you could definitely avoid something like this, which I'm guessing happened. This one probably actually happened in March 2020. So, because this one was tested during, the last Black Swan, and also all of 2022. So again, just easy ways to optimize it. That's where I'd start. But we can see, how many bars would we be expecting to kind of stay in these trades, and in the winning trades, about 16 on average. On the losing trades, 40. In terms of average win versus average loss, about 1.25%, almost 1.9%. Again, these are areas where you could optimize it, but even without that, it is, well, dare I say, viable. And that's really it. I mean, in the past, basically just over 4 years now, it's had 534 trades. So it doesn't trade super, super often. If you break that down by months, that would be like 40-ish trades per month, something like that, 30 to 40 trades per month. So fair enough, just put things into perspective. So yeah, I think that's a good place to leave off on this particular video. Let's actually very quickly go over Bitcoin here. Let's go to the daily. What's the daily looking like? Really no change from this past week. This whole past week has been more or less nothing as far as I'm concerned. CME's closure didn't do anything for me to be neither bullish nor bearish. Most importantly, didn't confirm bearish, although that is still very much available. Basically, Bitcoin just takes out Thursday's low. 42,100 would probably do it for me. At that point, very likely looking at a move and a return back to 40,000 bucks, as the median is traveling all the way down there now. And from there, game might become a little bit more interesting. But realistically, does the weekly close do anything for me? It did close above the median, but this is not really a Bing and Bong setup, unfortunately. It would be if it was the first test. It's not. This was the first test right here, so that was the easy call. Now, it doesn't really do anything for us. If it closed below the median, that would be an easy call for downside coming in next week. But I suspect that next week's probably going to be more on the boring side as well. I don't think that we see anything like super, super interesting until like the 12th. I might even be on a plane on that date as well, so you never know. Oh, and my face isn't even there, so you can't see me. Nice. All right. Anyways, I think that's probably a good place for me to be leaving off on this particular video. Just a nice and short and sweet strategy over here. Again, doesn't need to be anything super crazy. It's just consistency over time, as you can see. It's not, pretty fucking simple. Other than that, I want to once again humbly request that if you find this content valuable, please do consider liking and subscribing. We upload videos similar to this each and every day, or maybe not necessarily strategy videos each and every day, but once a week is what I try to aim for. And then other than that, just general market analysis. So I'll be signing off on that note. I'm thoroughly caffeinated up today, so I'm ready to go to the gym. And with all of that said, I want to wish you the best. Take care, much love, and see you hopefully tomorrow.